Yo guys, welcome back to another video. I've got a beautiful price breakdown that I'm going to run through with you guys here. This is from my journal. I think it was 20th of July. Yeah, 20th of July, 2023 this year. I was just going through my journal earlier, and I thought this would be a lovely trade to break down. Before we get into it, join my free Discord here. The link will be in the description. I share signals with you guys. I share my market updates, what I'm looking for on a daily basis. We had a winner on GU yesterday, which was here. Every single day we're pulling stuff out of the market. If we come into here, we've got boys smashing it, smashing the market, getting funded, all of that good stuff. And like I said, it's absolutely free. So get in while it's still open. There's about 30 members in at the moment, and I think we're probably going to be closing it when we get to about 100. So get in while you still can. So what are we looking at on EU here? As you can see, right, we've been trending up considerably, and we start to consolidate around, putting in a high. So when we start to be breaking down these internal structural points, and then obviously these external structural points, we can quite reasonably assume that we are going to be shifting trend for a potential pullback to catch the sells. Now, what we want to initially look for is a run on buy side liquidity or sell side liquidity, respectively, and then a break in structure to confirm direction. Now, what we see here is we have, first of all, a massive run on sell side. So we have sell side taken here, and then we go and take out that initial high, running buy stops for buy side liquidity, and again, one more push up for buy side liquidity, inducing traders onto the wrong side of the market, right? They've seen this displacement down, I will say, and then taking out the high. So maybe they're thinking, oh, this is a run on liquidity, um, and they'll potentially be trying to buy in here. However, what we notice happens is this low ends up failing and giving us a break in structure on the 15-minute time frame to confirm to us that we are obviously in this bearish trend. We've got high, low, high, low, high, low, high, low, right? So what we would then be doing next is waiting for a kill zone. So if I just mark on our kill zones, we're looking for 2 a.m. London kill zone to 5 a.m. As you can see here, this is our time window for the London session that we're looking to get involved in the market. So I'll just mark this down as LKZ. And we want to first make sure that we're trading from decent areas. So I like to use the GAN box, and I only trade out of the top or bottom 30% respectively. If I'm buying, I'll be trading out of the lower 30%. If I'm selling, I'll be trading out of the higher 30%. And we want to make sure that we've got a point of liquidity to take into the range to, get buyers induced or traders induced onto the wrong side of the market, which we have here, right? We have buy side liquidity here, which is taken into this extreme. We can basically use this whole range, as it is very impulsive, and just pull it out to above these highs here, because we're not going to be trading off these highs, and we want to wait for the kill zone. So price actually taps in during the Asian session and begins to slowly sell off. And because we are trading out of the top 30%, I wouldn't really be looking for a run on this high for a deeper retrace into our point of interest, because we're already trading out of the top 30%. So it's certainly worth taking the risk trading off of Asia highs, just because of price location, where we're coming from, and where we are potentially going to. So London kill zone comes open. As you can see, we have the start of the European session here. And what are we looking for? We're basically looking for a return to an order block or a range or an inside bar. As you can see, we get here during a kill zone, and we're looking for a nice significant rejection away from that. Now, you can either set a limit on your area, and If you wanted to cover the high here, you could. It's only a 10 pip stop. I would be happy to just cover this or wait for a reaction. And as you can see, we get a reaction here. Lovely bearish candle, which is, giving us some prognostication that we are going to continue the downside. And I would just cover this rejection candlestick high. Now, where's my take profit going to be? First of all, I'm looking for 5R. I basically take all my profits, regardless if it hasn't reached the sell side liquidity objective target. I just find that this keeps my win rate nice and high. Yes, you do sometimes miss out on these, big expensive moves. The trade did run 13R to be precise, but not every trade is going to do that. So you are looking for consistent profits and not home runs. Yes, home runs are nice every once in a while, and on the odd occasion I will hold a trade if it meets other high time frame objective targets. But for the most part, I'm looking at taking my profit at 5R. If you can take 5R out of the market 2 or 3 times a week, you're absolutely laughing. Rather than someone that swings for the hills for these massive, 13, 14, 15R trades, but they only manage to catch 1 or 2 a month, with a load of losses or break evens in between. So that's just my reasoning for taking profits at 5R. And, Paul Tudor Jones, one of the most successful hedge fund managers, he also traded and would look for setups at 1 to 5RR. So it makes a lot of sense. As you can see here, we do get a slight retest of this during our London lull session. And there was actually another entry in the New York session. If I just mark down here, 7 a.m. to about 10 a.m. New York local time. I do use sometimes 10:30. It really depends on the type of setup, but you can see again, we had a scaling opportunity here, which was bang on New York kill zone. So you could literally just set a limit here as well. After, we've had a run on relative equal highs here for our buy side liquidity. So you can be pretty certain that this high is also going to hold. And if you notice as well, we have this order block, which I'll start to get a little bit messy now. We do have this order block here too, which price is respecting, the bodies of the candles are respecting the EQ of this bearish order block. As you can see there, all of the bodies of the candles, we do get the wick that spikes up in and ultimately gives us like a little internal break of structure after run on buy side liquidity. We can reasonably and probabilistically presume, what's going on here, delete, that this high is going to hold. So then again, take profit 5R, which at this point is below that structural liquidity point, and you do get a lovely impulse in. And by that time, it's 10 a.m. New York time, end of the kill zone, and you've made 10R in a day. So that's basically how simple the strategy is. Just to recap, you're looking at a run on liquidity and a break in structure, a return to the higher or lower 30% respectively, and you're looking to take liquidity into that level and enter during a kill zone and target 5R. Stops either covering the rejection candle high or the order block high or low respectively. Cheers guys, and I'll see you in the next one.